All right, sweet. Hi, everybody. Welcome to what is it, July 7th MakerDAO community call. My name is David Utrobin. I'm the community development lead for the Maker Foundation, and I get the good pleasure of helping to grow the community, helping to produce educational resources, helping to get freelance contributors get paid and DAI to do cool stuff. And I get to host these calls and update some of the community with a weekly Maker recap, and then occasionally have an interesting guest on. Today we do have an interesting guest. I'm going to introduce him in just a second, but before I do so, I just want to lay a few just some context for the call. This call is meant to be not just like a presentation. I highly encourage discussions, so feel free to ask questions in the chat. Feel free to even request to come on the mic or come on the cam if you have one and participate in the discussion. But yeah, so we love interaction, and we hope that we can make it interesting for everybody on the call. So today we have a guest, Sidney Powell. He is, I believe, the founder of Maple.Finance. And in just a second, I'm gonna invite him on to the cam, and we're gonna talk a little bit about Maple.Finance, what it is, how it relates to DAI, and all that stuff. So I am sending Sidney a invite to come on the screen now. And also, so for the first half of the call, we're going to go through, thank you. We're going to go through the Maple.Finance portion, and then about halfway through the call, we're going to switch gears and talk a little bit about the week at Maker, because this week has been very filled with action and filled with interesting stuff that's happening. Especially with regards to the comp distribution change that caused the DAI money market on Compound to just totally blow up in terms of like volume. It's like a 650 million DAI market, which is like pretty insane, but interesting nevertheless. And Maker Governance has been in conversations both on the forum and in last week's governance call to mitigate potential problems that might cause for the DAI peg. So let me see. Yeah. Hey, how's it going, Sidney?
Hey, David. I'm not too bad. How are you?
I'm not doing too bad either. Oh man, I just realized that your audio is coming out of my computer speakers and not my headset. Give me just a second.
Sure.
I mean, actually,
That's all right.
think it
Hey,
should be okay.
I've also got John Lundstrom, who's in the chat as well, who's our CTO. So I'm just wondering if I might pass over to him at some point if we're able to do this.
Yeah, absolutely. Just let me know and I can invite him onto the screen.
Okay, perfect.
All right, cool. Now my audio issue is fixed and you are in my ears. So, Sidney, so tell us first off, hi. Good happy Tuesday. Hope you're doing well. So tell us a little bit about Maple.Finance, because I know that it's not like a super well-known project, but you guys are cooking up some interesting stuff with smart bonds. I know there's also like this aspect of a community-driven like peer-to-peer lending market.
Yeah.
So yeah, I would love to get kind of the synopsis of Maple.Finance and maybe even like a small demo about the app if you guys have. I know you guys recently, maybe like a few weeks ago, launched on mainnet, if I'm not mistaken, right?
Yeah, so I mean, we'd actually had our proof of concept on mainnet for a little while, but what we released was a major UX upgrade. So it's now much easier to go in and like join a lending community and participate in the peer-to-peer loans that we're offering. So anyway, happy to jump in and tell everyone on the call a little bit more about it. Great. So what Maple is a decentralized, or what Maple Loans is a decentralized application for under-collateralized lending. So we let users join communities where they can borrow or lend peer-to-peer stablecoin loans. So where Maple Loans differs from other lending protocols at the moment is that we're focused on the under-collateralized lending space. And that means that a borrower could come onto our platform and rather than provide 150% collateral with a risk of liquidation if it drops below that, they would be providing, say, 70% collateral and taking out a loan for a fixed term with repayments happening every month at the moment. So we think that this is really, really important for crypto lending to reach a larger audience because your typical business or individual who wants to borrow don't necessarily have 150% collateral lying around that they can stake. So to reach these borrowers, what we're pursuing is a path of progressive under-collateralization. So we could see that a borrower might start with, say, 80% collateral, and then as they actually build a track record of repayment, then they would progressively be able to take out successive loans, which would be at lower levels of collateralization. And they're going to be able to leverage the track record they've built to also get a better APR on their loan for lenders. So we see that as a path to getting businesses more comfortable with borrowing through crypto, and then lenders on the other side of the trade more comfortable around the credit risk that they're taking in lending to borrowers.
Right. Yeah. So that's interesting because I know that one of the biggest obstacles for under collateralized lending in crypto is the whole reputation problem. And how do you
100%.
do under collateralized loans? It requires like a level of trust that's not so easily gotten, right? But that's the whole idea behind the community behind this lending protocol of Maple.Finance, right?
Yes, yeah, 100%. So early on, when the communities are smaller, what we're doing is we're getting to know the borrowers more so that we have a higher level of conviction in their ability to repay. And we've done that with the loans that we've originated while the platform's in beta. So we did a large loan to Bright ID DAO. We've done a few loans for the purpose of travel before COVID. And then also some for crypto collectibles. And so that reputation element is important early on. But we recognize that to move beyond that, we need to have some means of scaling, and trust like that doesn't necessarily scale as easily. So some of the things that we've worked on, and this is one of the things that's super exciting about the UX release we just did, was we've incorporated a risk score. So people who borrow will be able to see a score provided by a project called Credmark, which is basically like a FICO score that looks at the address of the borrower. And we're looking at other reputation solutions we can offer there, like 3-box profiles. And then the other thing is, as I mentioned before, progressive under collateralization. So can we start higher, and then as we build a track record, build out that reputation, then you can go lower on successive loans. So maybe your first one's 80%, then your next one's 70%, and then progressively you increment lower.
So I guess the most obvious question for somebody that's considering your product is what does recourse look like if the borrower doesn't repay this under collateralized loan?
Yep. So right now, recourse would be if you miss 3 payments. So we're giving borrowers 3 payments, 3 strikes and you're out. If you miss 3 payments, then the lender would be able to claim the collateral that the borrower has provided. So right now, we're taking collateral as a deposit in the coin you want to borrow. But what we're working on at the moment for V2 is we're going to integrate other forms of collateral. So you're going to have ETH, and you're going to have any form of ERC20 token. So then once a borrower misses 3 payments, then the deposit they provide, so if that's like 80% for their first loan, the lender would be able to claim that. And then that means that the lender reduces the potential exposure they suffer if a borrower defaults. But conversely, what that means is for the part that they're not protected on, that 20%, that's where the lender is going to collect a higher yield. So they're taking credit risk, similarly
Right.
to the way that other lenders and banks do, and then they'd be earning a yield sort of in the teens on that. And across a portfolio of loans, provided the defaults are smaller than that interest rate, they'll continue to grow they'll continue to earn a positive return. And that's the way we see it working.
Yeah, that makes sense. So it's kind of like the tranche system, where the kind of the best tranche earns the lowest yield but has the lowest risk. But then for the positions that do the full repayment, the last tranche, which is like the highest earning, gets to bank on those returns. Okay,
Absolutely.
got it.
And that's where we see it connecting with smart bonds, which was one of the original concepts I had when I was thinking of Maple loans. Is once we have these loans, so these are revenue generating tokens, let's connect them with bonds. And so you would have almost like a balancer pool of loans. And then you would have people who provide funding to that pool. And then they have like a senior bond position. And then you would have like a middle tranche, which earns a higher yield, but takes a bit more risk. And then you'd have the person who underwrote all of the loans, and they would take the riskiest position, but they would also earn the highest returns. And what that enables you to do is start to have a self-sustaining crypto lending system, whereby you have investors that don't necessarily need to assess the risk of each loan, but they can just put their investment into a pool and set and forget it.
So one thing that I'm trying to wrap my head around is the level of, or like, maybe if you could dive into the property of fungibility with regards to these positions. So you mentioned that eventually, like, you'll be able to pull liquidity from like these different tranches of suppliers, right? Are the, like, actually, let me start the question off like this: how are the positions actually created? The borrower makes a request, or is there just a pool of supply that's happening? Like, what's the process?
Yeah, sure. So, and this would be great for us to go through on a screen share in a minute.
Yeah, sure.
Is that what happens is that a borrower first comes to the platform, and they can either set up their own community, so they'd be like the leader of that community, or they can join an existing one. So let's say you join an existing one as a borrower and a lender. Once you have access to it, it's really simple. There's just like a request loan button, and then you basically go through. You've got like 4 inputs. So you choose, your amount, your APR, how long you want to borrow for. In V2, once that's ready, at the end of this quarter, you'll be able to put down the different types of collateral you want to provide. And then that request is posted to members of the community, and then they can choose to fund it. And so you can have one borrower, like you, David, could create a loan request.
Right.
And then me and anyone else who's a member of that community could choose to fund it.
So you could partially fund requests, right?
Yeah, exactly. So, I mean, actually, some of our larger loans were ones that were partially funded. So it gives the borrower the opportunity that even if they can't get the full amount, like let's say you wanted 10K, but the community members are willing to provide, say, 7 or 8K, you still get that 7 or 8K
under the same APR and under the same requested term, right?
Yes.
Yeah. The only difference is the how much of a loan you're getting. Yeah. Okay. Cool. So then, what does fungibility look like for these? Because it sounds like it's kind of like they're term-based loans. They vary in the amount of debt for each, and it sounds like the person can set different interest rates and terms. So yeah, I guess, do you see this as, like, I know, trying to like phrase the question correctly in my mind. So
how do you pool it, basically?
Well, no, like in my head, I'm trying to understand whether like the loans created on the Maple platform whether they would make sense as collateral for anybody. And I know like the Maker protocol relies heavily on like the fungibility of the assets that it is most comfortable accepting as collateral, right? But with this kind of product, it's not exactly fungible, but I'm just trying to wrap my head around kind of the product market fit of this type of loan.
Yeah, no, I think I can help you out there. What I'm thinking is every loan is unique across all dimensions. So you've got the amount, the APR, the term, and then you've got the borrower credit quality, and then also maybe the collateral supplied.
Right.
But once you get enough of them together in a pool, you start to have degrees of similarity or aspects in which the loans are similar. And this reflects how this is actually done in the traditional financial system, where you would start to group loans by, say, borrower quality.
Right.
You would say, here we've got 1,000 loans which have been done for, say, credit card debt, and the borrowers are all quite reputable and very low risk. And so the loans then are all have an APR within a range of, say, 10 to 12%. Quality borrowers are all generally between, say, 5 to 10,000 in size. And so once you start to get those kinds of similarities, then you can group loans into pools like that. And
that makes sense.
They're not exactly the same, but you'd have a whole heap of, say, ERC-721 tokens on which are broadly similar within, say, 3 or 4 dimensions. So then you create a pool of these kind of loans, and then they would be considered fungible enough that you could start to issue, say, a bonds or take funding into that pool, where borrowers, where the people providing the collateral to the pool are comfortable enough that the loans are similar.
Right. Yeah, that's a really good answer.
That's where you would start to have the level of fungibility that could qualify it as collateral for, say, MCD.
Cool. I saw that Juan asked the question, interesting, how do you guys manage the default risk? And I know I might have already asked something similar about like what happens during like the recourse. But yeah, how would you answer that question?
Yeah. So I'd say what we're seeking to do is not wholly manage 100% of the default risk. The idea is that if we can reduce the exposure that a lender is going to incur on default by, say, having like 80% or a similarly high amount of collateral provided at the outset, then that means their risk of default is only 20%. Their risk of loss on default is only 20%. And you would price that risk into the APR. So somebody who's lending on Maple is going to be earning a yield that's probably more in the teens, whereas if they were to provide their funding on Compound, they have a lower risk of default, but therefore they have a correspondingly lower yield, which is going to be in the single digits. So you would take a portfolio approach where it's ideal if you're not just doing one loan, but you're doing multiple loans, so that you can, across, say, 10 of them, you're earning a 10 or 15% yield. Then if some of them default, it doesn't matter, because the interest you earned meant that you still came out on top across the 10 loans that you lent to.
So there's a couple of things I noticed there. So naturally, it sounds like the risk premium on under collateralized loans is higher than for secured loans naturally, right?
Yes.
Yeah, so yeah, it's captured in the risk premium then. But that's interesting. So how is that rate set from the beginning, like without much data? Is there kind of like industry heuristical data that you can go off of in like the bootstrapping phase of this?
Yeah, very, very good question. I mean, you kind of have to look at the opportunity cost, both for borrowers and lenders. So for small business loans in the traditional financial system, you might be looking at like a 20% plus comparison rate. And then you've got credit card debt, which tends to hover probably around 20 to 23% in most areas. So those are kind of the comparisons we're looking at. We want to provide a rate that's both competitive for borrowers, but still offers lenders an attractive rate relative to their opportunity cost, which is going to be putting the money in compound, or some other form of yield farming. So we're tending to look at rates in kind of the mid-teens at the moment, so that someone who wants to borrow is still getting a better rate than they would on a credit card, particularly because we're chatting to these borrowers.
Right.
So there's a level of trust that goes into approving them on the platform, and for lenders, we obviously want them to be able to earn an attractive rate as well.
That makes sense. So
over time, I think it's going to. Over time, the plan would be for this to move more towards being an automated or algorithmically set rate, where you say look at somebody's credmark score or whatever other metrics we're able to identify with respect to their credit risk, and the amount they want to borrow, and how long they want to borrow it for, and then we would set a scale. So we'd then offer them a price that makes sense for those loan characteristics. And that way we'd be able to get a more uniform market, so that, as I said before, we can start to get these loans looking
more bundles,
so we can bundle them together and pool them.
Cool. The next couple of questions I have are related to kind of how DAI being off the peg at any given moment might affect the mechanism of like this loan, right? So like at the moment, Maple loans, they're collateralized by DAI, right?
Yes. So at the moment, we're taking the collateral in stablecoin. As I said, we're building in currently what we're doing on the roadmap at the moment is building in the ability to offer other ERC20s and ETH as collateral as well.
What do you use for oracles, like specifically for the current implementation for DAI? Do you guys just hard code it at 1, or do you guys take an oracle type from anywhere?
Well, because the denomination matches the form of collateral at the moment, there's no basis risk. As you start to deviate from that, then you have more basis risk, where the collateral has one price and the denomination of the loan has another. What we want to do to kind of differentiate ourselves is we just want to have like a one-time deposit of collateral over the fixed term, and then kind of remove that basis risk, and then we would add more active collateral management as something on the roadmap for the future. So
for those on the call that might not know what basis risk is, including myself, what's basis risk?
So basis risk is where within a transaction you have the value of two assets that might move contrary to each other. So you're taking out a loan and you're repaying it in DAI, but you're staking say ETH as collateral. If the price of DAI relative to ETH moves differently, then the value of your collateral has dropped relative to the value of your loan, let's say.
Right. Okay. Makes sense. Cool.
Yeah.
So then,
sorry for the jargon.
No. It's okay. That's why I ask, because I'm sure at some point I read that term and I understood what it was, but my brain is fuzzy on a Tuesday morning, and I'm sure like a lot of people like often forget jargon, so it's totally fine. Yeah. Jargon is important to learn.
Collateral risk management will become important in future. So right now we would, or in what we're building at the moment, it'll be just a deposit up front where you set the amount of collateral you want to provide, and then that's movement in the value of that collateral is just an element of the risk of a transaction over the life of the loan. But then in the roadmap in future, we would look probably at like Chainlink, band protocol as well as another option.
Specifically for using their oracles to keep track of like the collateral price, or were you talking about Chainlink as Link as collateral itself?
Well, Link can be collateral itself because it's ERC20. So once we have this out towards the end of this quarter, people will be able to borrow Chainlink itself, or they could use Link as collateral if lenders are willing to take it.
So then, currently, how does DAI being off peg? DAI being off peg, does it currently adversarially affect the Maple Loans business or borrowers, suppliers? How do you kind of see that? Like when DAI is trading at $1.03 or even lower than peg, how does that affect kind of the current loans that you guys have?
No. So the answer is that it affects the borrowers. If let's say DAI was 103 or 105, and so it's relatively more expensive to convert from US dollars back into DAI. The way that affects borrowers would be that their debt has now become 5% more expensive.
Right.
Conversely, if it drops from the peg and goes to 95 cents, it makes their debt relatively cheaper to repay. It's kind of the same effect for it's the same as it would impact somebody who's borrowed a loan in US dollars, but they reside in Vietnam and earn their income in
it's the currency exchange risk or whatever it is.
Earning income in euros and needing to repay debt in dollars.
It makes sense.
I will say it's been particularly the last few months have been a bit painful for me because I earn income in Australian dollars and then have to pay expenses in US dollars. So.
Oh man. Well, that's always an interesting situation. I do not have this issue. I get paid in US dollars and all my expenses are in US dollars. But all right, cool. All right, that's interesting. So, do you guys currently have a working app and like a UI that people can access, right?
Yeah. So what I'll do is I'll get if we can add John Quanstrom to the screen share. I think we'll go through a demo, and it's worth saying that we're finding some really good early use cases for this, where we're looking to go where the early crypto users are, and so some of the things that we think about that would be perfect for this are like traders who want to get additional leverage on their capital, and they might have a trading horizon, which could be quarterly, semi-annual, and they would be able to provide some collateral in ERC20 or ETH. And so we can enable them to get that additional leverage without the risk of a near-term liquidation that they might incur on another lending platform. And then also people who have large crypto holdings, but they generally borrow to fund their living expenses. So this is what I call hodlers, debt consolidated hodlers.
I know a few of those.
Yeah, exactly. So we can provide quite a useful way for them to borrow. And the product that we're building at the moment is actually an interest-only loan, which is perfect for them because they can preserve their capital. So it'll be cheaper for them from a cash flow perspective. And it's just over a fixed term. So they really have like a clear idea of their obligations. And then you've got people like remote workers. So, we pay our front-end developer in DAI. And so he's going to have trouble accessing a loan from the traditional financial system.
Naturally,
But over time, as he starts to build a score behind that address, it will make sense for him to just plug in and apply for a loan through Maple. And then we've also done loans for like crypto collectibles and sort of in-game items, NFTs. So I see like there's this huge potential.
Sounds like a lot of there's definitely a huge market for definitely under collateralized loans. I guess it's just a matter of getting it right. So just a quick hello to John Cornstorm. You are remind me the technical,
CTO.
the CTO. Cool. All right.
Tech lead, lead engineer, whatever you want to call it.
Nice.
Yeah.
So just a quick time check. It's 12:30 right now. I'm down to keep you guys on for like the next 10 minutes, and then maybe the last 20 minutes of the call we'll go into the usual agenda, and I'll kind of cover what I usually cover in these calls. But for the next 10 minutes, let's. I would love to get a quick look at the app and see some of the functionality.
Yeah. So let me go ahead and I'll share my screen, and you guys can let me know how clear of a picture you've got on it.
Will do. And just a reminder for people on the call, there's a little ask a question module at the bottom of Crowdcast where you can ask a question. And if I see it there, I'll ask it on your behalf.
All right. Does this look pretty good?
Yeah, it looks
awesome.
awesome.
To be full screen. Excellent. So, I think to begin with, we've gone through a couple different versions, and what we're looking at right now is actually version 1.1. So I guess it would be technically the second version, and we have quite a number of communities that we've created. So, for instance, if I go to my communities, we can see all of the communities that I've created, as well as the communities that other people have created, and I've been invited or accepted to become a part of. So let's go through the instance of I would like to borrow maybe some DAI from Sid, and I happen to know that he's the leader of Unstoppable Lending v1.1 and TravelDAO v1.1, which he had mentioned was for conferences. So to kind of show what it would look like to create a loan request and have it funded, I'll go to TravelDAO v1.1, create a loan request, and I'm given a number of options to choose from. How much I would like to borrow. In this case, let's say I'd like to borrow. Sid, do you have 50 DAI?
Yeah, maybe just go 30.
30 DAI. Currently we have DAI or USDC. However, we can always add more directly to the smart contract. And then I have the other two options would be the interest rate and sort of the term, like how many monthly payments I would want to pay it back. So let's go ahead, I'll set up to 19% interest. And as I select my term, I can kind of see how the principal and interest payments would break down over time.
That's actually really, really cool UI. I really like that. Thank
you. So we're working on different interest payment structures right now to either have flat ones or bullet loans, which are more traditional bonds where you just pay the interest and it's a massive payment at the very end. But currently we have our, go ahead.
Without interrupting, it's worth noting, so you can see there in the orange panel, that's the credit score of John's, the wallet address John's using. So over time, we want this score to build out to be something really accurate, which helps generate an automated price suggestion for borrowers.
And the Clear Score, we're actually working directly with Credmark, and they do on-chain analytics. They actually take into account how good of a borrower you are with open CDPs, and if you are liquidated at all, it hurts your Clear Score, and then your Well Score is tied to really the assets you have in your wallet. So it's kind of a dual score measure, and now they're actually taking repayments for Maple loans and feeding that back into their Clear Score as well.
Super cool.
So let's go ahead. I'll do a 10-month. Go ahead and confirm this. And I know that we don't want to wait too long. And by the way, the gas fees are expensive, but they're not this expensive actually. We have the gas, there's a refund. It's probably about, I would say 30 to 40% of the cost here, but I'll go ahead, do it quickly, or actually pay the higher gas fee because we don't want to wait too long. And then we like to track the transaction, provide a nice screen while we're waiting for the loan request to be created. Perfect. And Sid, you should have this Travel DAO loan in here. So now, and actually, Sid, I'll let you go ahead and fund that. And while you're funding that, I'd also like to show sort of my lending history. So this is an aggregation of all of the loans that I've lent to on the platform. We have one for borrowing as well. However, I don't have any outstanding loans until Sid goes ahead and funds that one. I did prior. But this is essentially like, I guess you could almost think of it as if my address, like my Ethereum wallet, was a CLO originator, and I just have a ton of loans and payments will be due directly to me. And I can see, what's the APR on if we were to aggregate all the total loans that I'm owed money on, the interest that will be projected, and we actually have a breakdown. The left column is in USDC, and the right column here is in DAI, and we take like a 30 days, so 0 to 30 days. This is what I would be projected to be paid, assuming no defaults on the loans. And if I go down here, I can see in which communities each of these individual loans are for, the next payments for them. And I actually would really like to show the Bright ID loan, which we have the next payment due in about 7 days. I threw in 10 DAI into it. That's the minimum you can fund for a loan. And, we have like my individual contribution here in light orange, but in dark orange, we can see the total, how much was requested, how much was funded.
That loan's funded now. So
I should have information.
To show what the future repayments will look like and the options to repay it.
Perfect.
And then we can probably wrap up to keep David's schedule on time.
Yes, definitely.
I'm super impressed with this UI. I really like the data dashboard element to the user experience.
It's tremendously helpful. Now, if I had multiple loans outstanding, it would show an aggregation here. But if I wanted to just look at the individual loan, I could go down here. It appears I've been supplied 30 DAI. The next payment, now we have 30-day intervals, but there's a 30-day funding period when the loan is first created to really give lenders the opportunity to come together and fund a specific, like if this was 30,000, it might take a little longer than 5 minutes to fund it. But this shows actually my interest breakdown that I'll be paying per month. And then if I just wanted to look at the principal, nothing special here. It's a flat principal of 3.92. Oh no, I'm sorry. 3 principal per month.
And so it's worth adding that in the product we're building at the moment, we're creating the option for people to just do an interest-only loan, which I think is going to help. As I mentioned before, this is going to be more beneficial to use cases like traders and like hodlers who want to preserve their capital and just do once-off principal repayment at the end of the loan.
Really quickly, what's an interest-only loan? So
an interest-only loan would, David, would be, let's say you took out a $100 loan and it was at a 10% interest rate.
Yeah.
Every month you're just paying 30 days worth of interest at 10% on your $100. You don't actually repay any of the loan.
Oh, I see.
Over the course, and then you just repay the $100 once at the end of the loan.
Got it.
That's really suitable for businesses and traders
that need that liquidity.
Keep the capital. Yeah, they want to keep the capital as long as possible, and also the actual repayment would be a higher cash flow for them if they had to repay it each month.
Yeah, so, yeah. Kenton mentioned it's like a traditional coupon bond.
It is.
Yes. Yeah. Correctly.
Cool.
Correct. All right. I think that kind of rounds out what we wanted to show you guys today. But you can reach us. So we're on Twitter at Maple.Finance. And then we've got the app is live at Maple.Loans. And then we have a Telegram group, which we can post the link to in the show notes, as well as a Discord server. So,
are you guys deprecating Maple.Finance, that domain?
We've got Maple.Finance. I think at the moment
we might migrate to it.
So we set up Maple.Loans afterwards, but we're thinking that just for simplicity, we'll probably migrate back to Maple.Finance.
Nice.
Consistent with our Twitter handle.
Cool. Yeah. This is really cool product. I really like the user experience in that whole demo. Super impressive stuff. And I saw there was one more question. I think Kenton came into the call a little bit late because I already asked this. But what happens if the issuer misses an interest payment? And Sydney had mentioned that there are tranches where
three missed payments, and then the lender would be able to claim your collateral for the loans, Kenton. And then once we move to when we move towards pooling the loans, that's where an investor would then benefit from that kind of structural protection, where they're higher up the priority stack in terms of repayments. But right now it's 3 repayments missed, and you claim the collateral.
Right on. Thank you for reiterating. Appreciate it.
Well, all David, right. Thanks for having us on and giving us an extra 10 or 15 minutes to demo the product too.
Yeah, John, Sydney, it was a real pleasure, and I really enjoyed the demo, and I really enjoyed the conversation. So thanks for coming on, and I can't wait to have you guys on maybe a year from now or something, and see where Maple Loans is then. Hopefully,
really appreciate it, David.
Hopefully, lots of originated loans.
Definitely.
Yes, indeed.
All right, sweet. All right, I'm kicking you guys off, and we're going to get into the agenda for a sec. So yeah, thank you for coming on. So for those of you on the call, there's a little green button right underneath my ETH Berlin Zwei shirt that says agenda for the call. It includes all of the links. And so I'm actually going to move my webcast thing here so that I could share my screen and we can get through some of what's going on. So give me just a sec here. All right, that should be the right window. So let us start. Yeah, let's start with kind of the governance overview. So yeah, this week in Maker has been quite interesting, especially with all of the stuff going on Compound. But here's a couple of quick TLDRs. The governance facilitators initiated an emergency governance action to raise the ETH-A debt ceiling. This was done in response to the DAI demand growth that pushed the peg up over the weekend as a result of the redesigned comp distribution. And so, actually, I can actually show you guys on a. I'm not on my work browser, but that's okay. Where is it at? Markets. Yeah, so as you can see, because of the change in incentive for how borrowers and suppliers earn comp on Compound, it's actually caused the DAI market to balloon. And it's really kind of, I don't want to say alarming, but it's very interesting what's going on. And so governance has been kind of all over it at Maker, and a few really interesting things have happened. So yeah, the first thing that happened was this quick ETH-A debt ceiling increase from 140 million to 160 million. This vote passed already pretty quickly, and I think the debt ceiling right now is already past the governance security delay. So yeah, and then the other thing, yeah, I already mentioned this, but that's kind of the main theme for this week. So a couple of completed votes this week. I already mentioned the debt ceiling raise. And then the collateral greenlight polls that were running for 2 weeks have also concluded. And so you guys could see the breakdown of the weights here. They're not like exact. They're just like more or less accurate, maybe plus minus like 100 MKR on each side. But yeah, so you could see kind of the general MKR holder sentiment around these various assets. for this last round of community greenlight polls or collateral greenlight polls. And just as a reminder, collateral greenlight polls are used to inform the domain teams about what priority to put on these various assets when they do their work. For example, when the Oracle team does a assessment around the quality of oracles for a given asset, which is super important in assessing the risk for having a vault type of that asset. When they do that, they kind of look at these greenlight polls to measure the community interest in a given asset. So that's kind of a little bit about what the greenlight polls are. If you're interested to read more specifically about the collateral greenlight polls, I link the MIP9, which outlines the whole concept here. So feel free to check that out. Only a couple of open votes are happening right now. It is the weekly base rate adjustment, which recently came back down to 0 after it was up to like 25 basis points for about a week. And then the whole comp thing happened, and really quickly the base rate came right back down. The bi-weekly DSR spread adjustment vote is also here, and there's no serious change as far as I could tell from the MKR that's voting on it now. I think the winning option is still sitting at 0%, as it has been for kind of the last few months. For those of you that are new, there's a handful of recurring threads that are useful week to week. If you're an MKR holder and voter, you could check out the Governance at a Glance thread. Long for Wisdom does a great job updating it, and it has a lot of the current events from the perspective of the forum and kind of all the active discussions that are happening. So definitely check that out. We also have a thread that lists all of the active and inactive governance initiatives. It links to kind of their forum threads and all that good stuff. There's also a refreshed link every week that I put up here for the weekly MIPS update. This is actually the one from the week before, because this last week we've been on a bit of a break. If I was sharing my whole screen and not just this application window, I would show you, but we are currently in week 1. But the week from June 28th through July 4th was kind of an off week in regards to the MIPS monthly cycle. Yeah, a couple of quick things about MIPS. Tomorrow's the deadline to actually submit any proposals and sub-proposals for this month's governance cycle. There was a question from last week about why MIPS are able to skip the 3-month request for comment phase that was outlined in the initial MIPS. And so actually got an answer, thanks to Charles. He mentioned that it was explicitly overridden in MIP2. This phase ends 3 months after there is a formal core governance framework in place and a functional collateral onboarding process. So this is a bit of like it's kind of like whenever the governance facilitators believe that this condition is filled, at that point they're going to become more comfortable requiring this mandatory 3-month request for comment phase. But at the moment, since we're in a sort of transitionary period, being onboarded into the whole MIPS process, the governance community has opted for flexibility. There's also a collateral status index if you're interested in a given application to become a collateral and to have a vault type on the Maker protocol. You can check out the status here. Again, Long for Wisdom, one of the governance facilitators, does an absolutely impeccable job of keeping this thing updated. Not only is the top level comment updated, but each collateral application has its own comment and further context. So definitely the one-stop shop if you're looking for the current status of any given collateral application. And then the other recurring thread that I have here every week is the summary of Thursday's risk and governance call. This is particularly useful to anybody who is not able to catch that Thursday meeting, but also doesn't really have a full hour and a half to listen through the entire call throughout the week. So this is a really wonderful summary that a handful of contributors in the community actually produce, and so it's filled with a ton of video anchors to the specific sections of the call. It has bullet points for all of the important points raised. It has links to all of the various mentioned threads and votes. So yeah, highly suggest skimming through those every Monday or Tuesday morning if you want to do a quick catch up on what happened in the governance call. These calls often have a lot of really, really great insight that I would not have caught had I not listened to them or read through the summaries. So yeah, highly suggested. And yeah, as you can imagine, this week's main theme around the governance call was comp farming and the governance response to the possible DAI demand shock. And so a handful of threads are actually pretty actively being discussed right now in the forums. There is the Vault compensation plan proposal, which a couple of weeks ago, MakerMan and Monet Supply, they presented on the governance call. And you could see the entire proposal here in this thread. And I'm about to sneeze. Give me just 1 second. Oh man, it's like hanging in there. Okay, cool. I didn't sneeze. So yeah, and actually there is an informal forum poll for the proposal just to gather a little bit of measurement for the community sentiment around it. MakerMan posted it, I believe, this morning or last night. And he mentioned in the thread that there will be an on-chain governance poll, basically asking MKR holders whether they agree with the proposal or not. And so I believe it's going to be happening at some point during this governance cycle. I hopefully will come back next Tuesday with an exact date for that. But regardless, we are in phase 0 of the plan, and if you're interested, I highly suggest you check out the presentation from a couple of weeks ago, and also this really well thought out thread. Yeah, so basically we're here. We're in the approval for the compensation plan phase. And then after that, there's going to be a ton more work. But I'm not going to dive into it too deeply here. If you would like me to dive a little bit more deeply into it, just ask questions in the chat. Happy to go back and answer them. Oh no. Okay, cool. Other threads. There is the beginning of a discussion for a governance chief contract redesign. So Diaz chief is actually kind of the linchpin contract in the on-chain governance system for the Maker protocol. And naturally, the first design has some limitations, and this redesign aims to address a number of them. And this is a pre-MIP discussion, so this is definitely in the request for comment phase. So if you are technically minded and are a Maker voter and are interested in giving feedback around this redesign, definitely jump into the discussion. And actually, if you look below in this Crowdcast, there is a little module called polls. And there is a fun poll we're running about what the new Diaz chief should be renamed to. So if you're on the call and you want to voice your vote, definitely pull up that polls module and vote. So far, we have 3 votes for DSS president. We have 1 vote for DSS master chief and 1 for DSS boss. So pretty cool. But yeah, cast your votes and I'll pass them along to the rest of the community in MakerChat. And likewise, there's another pre-MIP discussion that arose this week as a response to comp farming. And it's this new idea of peg stabilization modules. And so in brief, what it is actually it's the same code as the old migration tool that everybody used to get from single collateral DAI into multi-collateral DAI. And the idea is that it's basically like a vault that has a 100% collateralization requirement, and anybody can go in and put up for example, USDC, and generate DAI against it 1-for-1. And there's for the migration contract, there was a 0% stability fee. So this was basically like a free thing to do. It was like a 1-for-1 exchange tool. And then likewise, based on how much USDC was in that pseudo vault, people can go back and actually redeem USDC for DAI, also 1-for-1. And so the peg stabilization module actually uses the same mechanism. So it's great because it's battle tested code, and it provides like a number of really interesting benefits. So for one, it like ports a lot of the USDC liquidity into DAI and creates a really useful tool for short-term DAI liquidity at a 1-for-1 rate for USDC into DAI. But of course, the protocol is taking that USDC onto its like conceptual balance sheets. So MKR holders are bearing that risk. And so governance will also be able to set a spread on the peg stabilization module, allowing it to charge a small fee on every trade that's sent there. And this way it becomes an income generating feature and helps to compensate MKR holders for the risk that they take on taking on this collateral. And yeah, Wouter points out it wouldn't always be 1-to-1 though. Wouter, do you say that because of the idea that there's going to be a set spread? Yeah, exactly. Yeah, cool. Right on. Right on, cool. Bans. Well, I'm actually interested in the next week or two. I would love to have somebody, maybe from the smart contracts team or somebody who likes explaining stuff, to come on, and maybe we could do like a small, not deep dive, but like a medium dive into peg stabilization modules and how they're going to work in practice if they get through and are implemented. Another really interesting discussion, there was MIP 16, which is formally introducing the idea of the weekly governance cycle. Currently, MIPs operate on a monthly governance cycle, but there are a number of things like emergency votes and kind of higher priority changes that can't wait the entire month to go by before they're implemented. So there is this precedent for a weekly governance cycle. And so this proposal formalizes that. And in short, it's going to actually provide a predictable framework for maker governance decisions to be made on a per week basis. And it's also going to complement the monthly cycle by enabling recurring weekly decisions to be made that require quicker action. So it's really great to see that. I think it's going to add to the flexibility of the maker governance community. Super happy to see that. And I'm not sure if it's actually going to be entered for the governance cycle this month, although it might be because this is not a pre-MIP discussion. Yeah, I will confirm that next week. And then Livnev actually posted a signal request thread that I think people should go and vote on. Should MakerDAO signal that it prefers for comp rewards for DAI suppliers and borrowers to be disabled? Lev has a well written out reasoning for kind of why he's putting up this vote, and also Lev contributed very much to the conversation in the last governance call. So I highly suggest you check out that summary and kind of listen to some of the back and forth between him and Cyrus towards the end of the call. And we have about a minute left to the top of the hour, but I'm going to kind of really quickly blow through the last half of this agenda. And again, these agendas are archived, so you could always access them. If you're watching on YouTube, they're in the description. You could check out the 2020 agenda archive and just go to the date of your choosing. So yeah, a couple of things from the highlights from the community. Maker, the governance communications working group for the DAO actually launched a new newsletter type of publication called Maker Relay. and it aims to kind of cover what's happening this week at Maker, very similarly to how this agenda covers what's happening at Maker. They actually released episode 2 this morning, last night, I think. And the goal is potentially to merge the community call agenda with Maker Relay, so that double work isn't done, and so that the community really takes over this practice of synthesizing the current events and making them available for easy reading and distribution to Maker holders. There is the usual source cred trial stuff that I'm going to keep posted here until the end of the experiment. It's a 3-month experiment, and we are currently at the end of week 5. You could check out a review of this month 1 here. And the idea behind source cred is to pay people DAI in response to their activity on the Maker forum. And it's really, really interesting. It's a bit more complicated than that. That's just a super simplified way of putting it. But yeah, highly recommend you check it out if you're interested in incentivization mechanisms. It's definitely one of the experiments that the community is hoping to boost governance participation and reduce the idea of like voter apathy and forum apathy and all that. We actually just completed a Protect Privacy virtual hackathon. Hopefully, we'll be doing a showcase of the project submissions either next Tuesday or the Tuesday after. We'll see. But I saw a ton of really, really cool projects. We had 2 bounties there. It was privacy and payments and privacy and governance and voting, and both received a pretty nice turnout. For developer creations, I saw a couple of things. Mariano announced that because of the growth of the Maker protocol and the amount of collateral it has and all that good stuff, that DAI stats, the design as it is now isn't scaling very well. So it's going to get a full-on makeover in the coming weeks. So really looking forward to that. Then there was this HAL v1 recipe, and it's a cool tool to track your C ratio, collateralization ratio on your Maker position. So I saw that. It was pretty cool from the HAL guys, and I think Emiliano was actually in here earlier, if he's not still here. And then, lastly, a couple of articles. I missed this one last week, but the Dread Pirate Roberts himself wrote a little thought piece on remaking the Maker protocol. I personally don't think he understands the protocol like 100% well, but like it was a really interesting article. And then also another article that I slightly disagree with called A Little Unsteady talks about the thesis is like stable coins will need to be fiat backed at some level and it's unavoidable, but how he got there and kind of all of the in between was a really interesting read. So yeah, interesting thought piece as well. A couple videos. Rune participated in the CogX 2020 virtual conference, so check that out. He was on a couple of panels. I definitely recommend listening to one with your lunch. And yeah, from the foundation, there was only one partnership that I saw. It was called, it was Young announces a new partnership with MakerDAO. And I was trying to wrap my head around what the heck Young platform is. And apparently it's an exchange, it's an educational platform, and it's also connected to an app they produced called StepDrop, which, gives people their Young YNG crypto token by just walking around. So they're actually, they're integrating DAI in a number of ways throughout their whole ecosystem. And then a number of really great blog posts from the MakerDAO blog team. There's Making Maker 2020, a good recap of the last month of June, a governance-specific recap of the last month of June, and then also an announcement that the foundation is offering a 25,000 DAI prize to the winners of the Reddit/Ethereum scaling competition that the founders of Reddit posted about. And so yeah, you could check out all the info in these links. And with that, I'm going to stop sharing. And thank you all for coming on the call. If there is any final questions or comments or if you want to hop on the mic, definitely open to keeping the call running for an extra few minutes. But otherwise, thank you for coming, and I hope this was useful to you, and see you next Tuesday. All right, I'm giving the awkward silence a good 30 seconds, and then I'm gonna hit end the broadcast. All right, sweet. Well, thank you guys for coming, and have a great Tuesday.